What's going on, guys? Welcome back for another episode here on Let It Grow Investing. And this is actually going to be episode 300. I don't know where the time has gone. I know it's been a long road getting to this point. Thank you guys that have been here for, just a couple episodes. And, big thanks to all the people that have been here since episode one. It's been a long road. It's been a long, path to try to get, a little bit of financial information out there, try to ease some of the fears, get people a little bit more comfortable, kind of take Wall Street back to Main Street and help out those that might need a little bit more, guidance getting started, right? So that's what we've been here for, with the investing challenge, with all the things that I've said. I try to definitely think about the people that are just starting, right? So sometimes it might get a little bit wordy. The verbiage might be a little bit complex at times, but I try to dial it back. So if I've helped you out, I would definitely appreciate a subscribe and a share. And if I haven't, please let me know what you're looking for so that, we can get a little bit more education out and maybe guide you, or maybe I can do a little bit more research to help, help some of the community here. So I'm thrilled to be here. I was off last week. We were actually out in the Bahamas, and that was actually for a friend's 40th birthday. And there was actually 18 of us down there. So it was a good time. And we were actually there last summer as well. And we were at the Baha Mar by, what was that? Is that a Hyatt? I believe it was Hyatt. It might be Hilton. I forget. This time we were at Sandals. Two completely different experiences, but I would say Baha Mar was probably my pick of the two for a couple different reasons, but having all the friends there was a great time. So, we've got coming back off of that right into episode 300. A lot of different news out there, right? We've seen a lot of stuff happen in the past 2 weeks. This market has been up, down, left, right, every which way, and there has been so much going on. We've got, Trump tariffs going on. We got Warren Buffett. I believe it was yesterday or this morning even that he just announced that he's going to be stepping down as CEO. So that is massive with, some ripple effects, I'm sure, through Berkshire, through the whole market. Their cash pile is just, building and building. I think it's $377 billion now. And what's he waiting on? I was reading some Buffett indicators. I was looking at a lot of the different things that were, taken in with earnings season. Potentially when you buy one of these, the Buffett indicator is total stock market value versus total U.S. GDP. And I believe that current indicator is around 177%. If it gets over 200, it is, very strongly overvalued. Not a great time to buy, but there was just a signal that, we could go ahead and start purchasing. This article here on Yahoo Finance, strong earnings help tech stocks shake off tariff worries to log an upbeat week. Yeah, I mean, it was definitely a case where we didn't really have the highest of hopes. We were kind of pins and needles waiting to see just what some of these different companies said. And a lot of different things basically pointed to the fact that AI is still top of mind, top spending. We are still building out these platforms, and it's not going to change, right? So Meta showed what analysts call tangible business results from AI. Stock climbed, adding about 9% since the company reported earnings late Wednesday. Microsoft also reported Wednesday, gaining 10%. I think Palantir is just on a roll again. We got to talk Palantir. We'll get to that one. Amazon, Apple follow with earnings that topped street estimates after the closing bell Thursday. Tariffs, worries about tariffs weighed on enthusiasm for the stocks. Amazon shares little change Friday, and Apple dropping close to 4% after CEO Tim Cook warned the iPhone maker would take a $900 million hit from tariffs in the current quarter. Mary Barra, is that her name, from GM, also saying how much the tariffs were going to cause them going forward as well. So, we've got a strong week for most members of the Mag 7. Roundhill Magnificent 7 ETF mags adding over 3%. Stocks got a boost Friday after Chinese officials signaled interest in ending the trade war with the U.S. They said, hey, we're looking to come back to the table. Trump said he wasn't going to cut the tariffs in order to get them back, but then I read something that he could potentially lower to get them in the door. So there's a lot of talk there, right? But they have to have us buying their products because there's no other country in the world that is going to basically buy those products if we aren't doing that as the U.S., right? So it's a 5-1 deficit where we are buying that much more from them. And if they're making all this product and they've got no one to sell it to, it is going to be a huge loss for them. Lots of jobs on the line, lots of pain points for them if we are not buying the product. So I think that this is going to come kind of to a head here, and we're going to get some kind of meeting, some kind of results, or at least some kind of conversation going forward in the next couple weeks to really get this thing kind of ironed out, and how can we do business together and what's going to be fair for both parties. So I'm definitely curious to see what happens there. I'm curious to see what happens with Warren Buffett stepping aside and letting, what was it, Abel become the CEO. I might be wrong on that name. I think I just read that. So a lot of different things here, a whole lot, right? So let's get over to the market. Let's take a look at what Palantir is doing, as I really want to highlight where we can potentially go forward from here, right? So there's a lot of talk as to, these different stocks are overvalued, just how much that, some of these different stocks shouldn't be up. We've been watching Palantir for, I don't know, probably since the beginning. I mean, if I went back and look at the Investing Challenge notes, the ones that I was adding from Jump Street, I probably had Palantir on there back when it was probably a $10 or $15 stock. I've been adding it since then. It is probably my number one gainer at this point, now that NVIDIA has pulled back. And I'm really trying to decipher, well, and one of the things that got me here was I was talking with some friends about, what potential rock bands or any artist has staying power for the next 30 years, right? And it was kind of like, could you have seen Pink Floyd back in the day, or pick a different band? Which ones have that staying power to still be relevant in 30, 40 years? Maybe you like Pink Floyd, maybe you don't, doesn't matter. But the other thing was we were going to Metallica concerts. It was kind of what band from now is going to have staying power in 20 or 30 years. And that got me thinking, well, what stock is going to have staying power in 20 or 30 years, right? If we look at Apple from 20 years ago, if we take a look at, AAPL, and we go back and we take a look at this chart, and we go back even, let's pull up the 10-year. That might be even a decent spot to start. So if we're on the 10-year and we're going back, too much going on this screen, and, we're following this back 10 years. This is, where is our stock price here? Sorry, I got too much on this screen. So this is 2015. We were at $33, and this would have been pre-split. So, yeah, I mean, it 7x'd over 10 years, right? So what could possibly rival these type of gains from Apple or NVIDIA or, Netflix or anything else that has been around for that sort of time? So I got to thinking, what stocks have that type of power? I mean, yeah, you look at, what is this? This was NVIDIA at 56 cents 10 years ago. Okay, yeah, I guess we probably should have bought that, huh? Yeah, I mean, you can't even rival that sort of gains from 50 cents up to $114 in 10 years. Just absolutely insane, right? So what can do that again? And I guess it's a conversation of, if you have a chart, right, and you're looking at something that is difficult to enter in demand, right? If you got an x-axis and a y-axis, and difficult to enter, a little bit higher up, the demand higher up, what is going to be in that spot, right? And going forward, I think with all things point to AI, they point to data, they point to web security, and those are going to be a little bit more difficult to enter. Something like chips, right? Where you can't just simply make a chip company. I mean, I guess you could, but it's difficult to enter. It's not simply just growing corn or whatever. Not that that's necessarily an easy job. Don't get me wrong. But what is going to have that barrier to entry? And I think some of these different things with proprietary technology, you're going to have the right people involved to make web security secure and function, right? So you got to start taking a look at what stocks now are going to not be a commodity. They have high demand, and that the demand is going to come, at a premium price. You got low competition, and kind of that SWOT analysis, your strengths, weaknesses, opportunities, and threats analysis as to what companies can potentially do this. And I still think that NVIDIA is one of them. Believe it or not, I still think NVIDIA is in that sweet spot of meeting all those things. They've got all the semiconductors. They're still fairly valued. Yes, it's a $2.8 trillion market cap. So, maybe it isn't going to have the growth, but it's got the demand. It's got very few competitors. It's in the right spot for the next 20 years. So the fact that it has pulled back on the China tariffs and, if they're going to get an exemption to do business over there is all noise, right? I really, truly believe that. And it's going to be noise. When you look back in 15 years, when it's, 2040, and we're looking at NVIDIA and you're thinking, man, I wish I would have bought at 114. But sometimes we're just looking at it like, man, I missed it. It was a 50-cent stock in 2015, but now it's 115. I missed it. I completely missed the boat on it. I should have bought it. I just missed it completely. So now I'm going to look at Palantir, right? If we look at Palantir, PLTR, I still stand behind buying Palantir and expecting a lot of growth going forward. I know the PE is crazy. A lot of these valuations are crazy, but how far back can we go on Palantir? When did they go public? This is going to be like 21. So if I go advanced chart, can we see that way? Maybe I just should go. Yeah, still going to pop up here. So this is going to be September 1 of 2020. It was $11. And, over here out in... sorry guys, November 1st of 22, it was opened at $8.99. The high was $9.06. The low was $6.89. So it looks like we had a lot of volatility that day. That's December 1st. So yeah, I guess my point is yes, it traded sideways for a long time. It finally got noticed for the things that it was doing, started making money, which was a big driver in the fact of the actual stock price growth. Because back here, it was not making any money. It was losing money. And the CEO was kind of, unknown. People kind of thought he was, kind of a bit of a loose cannon, wasn't so tied to actually making money. He was just in it for the tech, right? And then when we started making that turn, we started making money, Palantir went through the roof. And the more and more contracts they win, the more that they are tied to the government, the more they're just completely enveloped in all these different corporations. I fully believe that Palantir has that staying power and the power to continue to grow. So, when I look at this thing now at 124 after a 7% gain on Friday, man. Oh, man, I know we talked about this one. In the 80s, in the 70s, like less than a month ago, it was $50 cheaper than where it is right now. And I was saying, hey, this should be purchased. Palantir should be purchased at this price point. And people, give you a hard time. No, it's overvalued. This PE at, 600 or 300 at the time, whatever it might have been, is still so rich. Zoom out again, right? I've said it so many times, but they have so many competitive advantages to other competitors, which, I don't know that anyone really has the same offerings that they do. But I believe wholeheartedly that this thing is going to go higher in the next 10, 15 years. So that brings me to a point where I have, and I'll show you guys, I don't mind. I have 443 shares. You'll see it down there. Made $3,600 on this thing. Well, I didn't sell, but my daily gain was $3,600. I'm at a $46,000 gain on Palantir. And that is on $8,900, right? So if you would have taken this back and go 20 years back with Amazon or Apple, and you put in, I forget the actual numbers on Amazon. I wanted to say that it was something, it might have been Apple, where if you put in $10,000, it turned into like 1.5 million. Can I get there from close to $9,000? Is this going to be another 10x play? I don't know. Could this go from 293 billion to 1 trillion? I certainly think it can. So I still believe it's got at least another 3x left into it. That being said, is it going to be a straight line up? That's where you kind of get this. Should I sell this? Should I write options on this? Is it overvalued? Is the market going to sell off? There are so many variables as to what you think that this could do over the next 4 months to 15 years as to what you want to do with this thing. Similar to buying Bitcoin and then, spending 10 or 20 Bitcoin on a pizza, if you've heard that story. That was one of the first Bitcoin transactions, was buying a pizza with Bitcoin. And, if you would have done the math now, that's a $2 million or $20 million pizza simply by not holding on to it and thinking, hey, I just want to use this, right? So I don't necessarily want to write options on it, but it is intriguing, right? If I actually look here and we can go out to, say we look at these June 6th expirations on a, and see, I always do these poorly because I never do this here. So if I look at a 150 strike price on Palantir for June 6th, and I write a covered call, that's 152s. If we look at a 150 call, I could potentially sell my shares, write the covered call at 465 right here, and I would get 100 times 465. So it'd be $465 for writing the call to sell my 100 block of shares at $150. So I would go up $25 on the strike price, meaning I would sell my shares for $15,000 for 100 shares, and I would get this premium of $465. And if it doesn't hit 150 on June 6th, I keep my premium, and I am not going to be selling my shares, right? And they would stay in my account. So the risk would be that I'm selling at 150. So if it goes to 190, I am contractually obligated to sell these at $150. Now, if it goes to 151, not a big deal. It's going to drop back down to 145 and I can buy them again. But if it just goes on this parabolic run and I can't get back into the shares, that's where you have that loss, right? I mean, I'm still winning. I'm selling them at a premium. I'm selling them for a 10x from where I potentially bought them, but you don't get the further gains. I'm very uncertain whether I even want to take the risk of selling them at 150, or do I just simply hold the shares and hope that I'm right going forward, right? Do I want to take that risk and hold them for another 10 years and think that this could be a $1 trillion or $2 trillion market cap, and my shares could go up another 3 to 6, 7 times in that next 10, 15 years? Yes, the PE is stretched. Yes, it doesn't look like it's a perfect time to buy, but I still believe that this stock could go higher. A lot to unpack there, but at the end of the day, I still believe that Palantir is going to be one of those stocks that's going to be difficult to enter. The demand is super high, right? So it's not going to be a commodity, but everyone needs it, or a lot of these companies are going to need it going forward. But it's not going to be simple to get in, like growing, like corn, like I said, for example. It's got a lot more difficulty. The customers that they have, they're not easy to get. So even if someone else starts this company tomorrow, are they just going to walk into the U.S. Army or the IRS or whoever else are their customers and just say, hey, yeah, we're the new guy in town and you should do all your business with us, when they're already deeply enveloped with Palantir? I don't think that they will. So again, I believe that their customers are a lot of their competitive advantage. The risks are definitely there from being overvalued, and the fact that other companies could potentially eat at some of their business over time, or someone else can build a better mousetrap. They could have a better technology than maybe what Palantir does, but they are still would have to play catch up to Palantir. They still would have to get into those different doors and start new contracts, which is a big undertaking. So something like a Palantir could have a lot of staying power. I still look at NVIDIA. I'm still looking at CrowdStrike. CrowdStrike is another one that is really rallied back, after some of the problems that they've had. We saw this thing hit $200 on August 5th, and that was after the data breach, or not data breach, the shutdown on the internet, and they couldn't get anything up and running, and Delta flights were every flight was grounded, but Delta had a lot of problems. And then I remember selling this thing in the low threes, got out of it completely, bought back in a little bit, but not enough. So I still have some shares tucked in one account. I'm not sure which one at this point. I'd have to take a look. But Alphabet slashes stake in CrowdStrike stock. So yeah, I still think that some of the, sorry, just reading headlines. I think that a lot of these stocks that are in this high, difficult to enter business with that high demand, and they have a potential to grow with AI and with everything else that's coming into the market in the next 20 years, are the places that we want to be. So while you might think, buying I see a lot of people saying, your commodity stocks, your Procter and Gamble, your dividend aristocrat names should be purchased right now. I don't want to buy a Procter and Gamble currently. Like at a 25 times on a Procter Gamble, yeah, you're getting 2%, but this thing isn't going to necessarily grow anymore. Like I don't really see the growth drivers behind Procter and Gamble. And I mean, if we actually hit a recession, I think people probably go to some of the cheaper brands, some of the store brands on different things that they could get from Procter and Gamble. So then it leads you to think like, what is the staying power? If people really get hit, if the economy really slows, if we don't have extra money for Tide and we just go with the bare basic laundry detergent, what does that mean for something like a Procter and Gamble? So again, I'm looking out more than just this next survive this short-term storm, and I'm looking for 10, 15, 20-year growth because that is what my timeline is. So, and conversely, you might not want to be in a UPS, right? If we hit a recession, UPS is going to just crumble. There's not going to be as much shipping. There's not going to be as many items being purchased. There's a lot of this talk out there. But again, if I can go ahead and get into a UPS and get a 7% dividend yield versus a Procter and Gamble, and know that if the economy continues to roll, this thing's going to launch back up. Yes, they have some pricing problems when it comes to labor, kind of on the line of who doesn't have problems when it comes to labor, how expensive it is anymore. I still think that UPS with a larger dividend than a Procter and Gamble from 2.5% to pushing 7% starts to make more sense for me to get into something like a UPS and get that larger dividend with potentially more upside on the stock, right? I don't know that either of them are going to be recession proof. UPS is going to have more upside. I think that it would probably be the one that I would lean on if I'm looking for dividends. One of them. O being another one, right? You're not going to get the growth that you're going to get out of a CrowdStrike or a Tesla or a Palantir or NVIDIA. It's just not going to happen. This is going to be a real estate investment company, right? So they're going to have a lot of different real estate properties around the world. We've talked about this one so many different times. I got my own screen, my pop-up from recording right where I need this to be. Actually, I'm on the wrong screen to even look at that at all. That would be on the home page. Let me get back over there. We can take a look. Where are their properties? And I know that they do have retail properties, which is another concern right now. If retail does slow down, are there going to be as many people looking to rent real estate from O? And that's difficult to know. It really is. So there are risks associated with all of these companies, even if you think that dividend is safe, right? So they've got 15,000 properties in all 50 states, UK, France, Germany, Ireland, Italy, Portugal, Spain, 9 different industries, right? Retail, industrial, gaming, and others. So they have risks. UPS has risks. They all have some sort of risk, especially with trade wars and, slowdown in spending and a lot of uncertainty around, really where your dollar is going to go right now. So is it a time to buy? Some of them, maybe. I don't think that all of them or all stocks are going to be something that you want to buy right now. But there are names that if you're trying to build a long-term portfolio could be purchased. It's also a case-by-case basis as to what you want your portfolio to do when you need the money. If you need it next week, no, I wouldn't do it. It's simply just it's too risky. If you're buying a house in, say, July and you want to try to make a quick buck, I don't think that the stock market is your play. I really don't. There's people that can do it. Don't get me wrong, but I don't know that it's for most, right? I think that, something like a CD where you can put it in a 1 month or 3 month and know that you're going to get X amount of money after this amount of time and not be penalized would be a better bet for you. Now, that being said, there are those different stocks where I think long-term, high, barrier to entry, high demand. Those are going to be the ones that on this pullback, this downturn, I know a lot of them have started coming back. There are going to be names that you can purchase out there. I continually think that some of this trade talk is overblown, but it is so unknown and so unstable. We really don't know what to play. So am I going out and buying every single stock? No, truthfully, I haven't. I finally got that snow money now that it's May. And, we haven't had the plows on the trucks for 3 months. now that money's starting to roll in. So do I have a couple extra dollars to invest? Yes. I'll probably mix it up and buy a couple different things and kind of fund out my IRA. There's a couple different things that I need to get money to, but yes, there will be some money coming in that I will be able to do some larger buys here now. Obviously that the market has started to rebound, now I've got the cash, so that's just the way that it goes sometimes. And I've been on the flip side where I purchased and then the market just completely sold off. So yeah, I mean, it just I fully funded my IRA, I don't know, 5-6 years ago with snow money. And then I bought everything and then the market just tanked. I forget what year it was, but it was kind of like, oh man, I probably should have laddered it out longer, as I tell you guys to do all the time, right? If you got 10 grand, maybe don't put it all right in right now. Maybe do 2,500 over the next 4 quarters and do it that way, right? So it's simply just a case of what is going to work best for you. Are you going to be okay with losing some money? And then where do you want to put this money? So Tesla, man, I'm actually was looking at a article on, where was it? We'll share this instead. About Elon potentially being knocked out of the CEO seat, and Tesla denies contacting headhunters to replace Elon. Someone saying down here that, where was it? Tesla investor says Elon Musk could be behind reports he's getting ousted, that he said it himself. That's potential is possible as well. So we really don't know. I want to think that he returns back to Tesla. We kind of move on from this, like we've seen with a lot of different other companies in times past, where the CEOs get kind of some bad press, and then they kind of come back and we move past it. I'm looking at Target, I'm looking at Louis Vuitton, I'm looking at all these different things that have been hit before, and then they start coming back. So could that happen? Yeah, I do believe it can. Excuse me. But I don't know. I still believe that Tesla's going to have a lot of data there, which is their competitive advantage from all the miles that people have driven with their cars. Their mapping is going to be better. The robotics, I think, are going to be stronger. The path for them to get to robo-taxis is going to be, I truthfully think, the best way we have to get there. I know Waymo's out there, and I know that you see like 4 of them when you go out to Vegas. I know that's an option, but I do have a belief that Tesla will do it better. And I think that they're going to get there first. I really do. So I do think that long-term, Tesla could be a major grower in the market. Right now, though, it is really, really tough to know. I told you guys I sold out of this one. I don't think I have any shares in my brokerage. I know I have some in an IRA. I know I've got some in the kids' accounts, and I know I've got some of the Webull accounts, but I don't have any in my brokerage. That was my large position, and I did sell out of that because I didn't know where this thing was going. I locked in my gains, and, I kind of thought this thing would be on more of a downhill slide for a longer time frame, and then I could go ahead and purchase back in. That didn't happen. So again, sometimes you learn from someone else saying, hey, maybe don't do that. Right. So maybe take my pain as your gain, and do something better with your position. But I made the call, and I put that elsewhere, and that's what happened. Another one that let's take a look at Eli Lilly. Eli Lilly had Zepbound removed from coverage from CVS, and that had a big drawdown on this stock earlier this week. We were at 917. What was this? Probably Wednesday, I'm going to call it. I can't see it on here with all these other pop-ups going on. And we dropped down to 820. Well, now we're at 824 after dropping all the way down to 794, basically overnight. So yeah, the Zepbound coverage from CVS was dropped. We've got sell-off is overdone, analyst says, and here's why. I'm guessing it's going to come to something about you can just get your drug coverage elsewhere, and that's what I would imagine. But Lilly only has one skeptic with the sell equivalent rating on shares. A rebounding on Friday, up 2.1% to 812. Might have a lot of upside to it despite increasing competition among weight loss drugs. Novo Nordisk on Thursday announced a deal to make its weight loss treatment Wegovy the preferred GLP-1 drug on the biggest Formularies run by CVS Health's pharmacy benefit manager, and a blow to Lilly Zepbound and its stock. So again, a lot of different things going on for Lilly. I still believe in the company long term. I told you before that, again, high barrier to entry. It is more tech-like than like a Johnson & Johnson or an AbbVie. So they are almost, they're pharmaceutical, but they almost have like a biotech feel in a lot of different ways. So they're going to be a higher valuation. They're going to be more volatile than some of these other ones. But I still believe that Lilly has a lot of room to run when it comes to some of their pipeline of drugs that they have coming out. So I think on any real weakness, this could be one that you might want to buy. We got about 19% of upside up to 983 right now. So under 800, I definitely think it looks like a buy. Man, I was listening to Zuckerberg on Theo Vaughn, which was a weird mix. But nonetheless, I still think that Meta and the fact that they are willing to take all these risks in order to, try to find the thing that is the next new thing for their user base, I think is a good thing, right? They don't want to stay in one spot for too long, because those companies tend to go by the wayside, right? If you think MySpace, right? They were the top, right? They were. And then someone else came in that continually, has been reinventing themselves. And it's not normal for these companies to last 20 years, but Meta has figured out a way to do that, by buying WhatsApp, by buying Instagram, by looking into the metaverse, to doing all these different holograms that they were talking about on this past weekend with Theo. A lot of the different things that they're coming up with, the fact that, we won't need a screen in, probably 10, 15 years. It's all going to be holograms, and just the way that things are going to be done is going to be so different. So I think they're going to continually reinvent themselves. They're going to continually look for new ways to make money. The advertising is still going to be huge for them, from large businesses, from small businesses. I think small businesses as well right now are definitely in the crosshairs, as a lot of these small businesses buying inventory from abroad, from China, from wherever else, is really going to hurt them, where some of these other companies are getting exemptions. These small businesses are not, right? Labor is going to hurt them more. Cost of doing businesses is going to skyrocket. And, some of these larger corporations are going to be exempt from a lot of the different things that are going on. So small business, man, my heart goes out to you. I'm right there with you. And we will see what happens. But Meta, still a strong stock to look at, especially from some of these pullbacks. We were 50 in February here. We dropped all the way back down to what is this, 510 maybe, and now we're getting our footing back. So this was probably a little bit too high, too quick, and we pulled back, right? So we got a lot of things to decipher from there. I still believe that this can be a $700 stock by the end of the year without too much luck, right? I really do believe that this could really rally here. So a lot of different things there, a lot going on. Really, it's all tariff driven. We've got a lot of earnings calls that we are watching. GM, I did talk that one. I wanted to take a look there. 15% upside. Had some news come out from them. Let's see what the CEO said. I think I got her name right. I might be wrong though. We got maintained outperform. They did just talk. They revised their guidance down. Here we go. This might be what we want to see. Why is it not showing? Oh, sorry. Share this tab instead. Sorry, guys. I do that way too much. Where was I? Companies are emerging as potential winners in the trade war. No, that wasn't it. Where was it? I just saw it. No, they're getting moved down there. There we go. Guidance down on trade impact or tariff impact. Revised their 25 guidance downward, adjusting for $4.5 billion in tariff impacts. The RBC Capital said in a note emailed Friday. Biggest source of companies' tariff burden stems from Korean and Chinese imports, according to the note. Impact from other categories is smaller and delayed until the second half of the year because of pre-tariff inventories at dealer lots. GM expects to mitigate up to a $1.5 billion tariff impact from near-term self-help measures such as pricing changes, increased U.S. production, and supply chain efficiencies. Firm raised their price target to 57 from 55, but then we've also got people down here that go from Bank of America goes from 75 to 65. We saw another one here that was lowering much lower. And now I'm having a hard time seeing that one. But if we go analyst research, we can see some of the different price point targets on here. And I know one was in the 40s. I think it just got cut to 43. Wells Fargo saying 34. That is a big drop from here. I think they think that we could maybe end up in a recession with those kind of numbers. We got a 46 from Jefferies, a 35 from Bernstein, other ones in the low 50s, Citi at 62. So we're all over the map here, right? There's a lot of people saying we could have a solid gain here, a 20% gainer, and then there's people saying we're going to lose, another 20% from currently where we're at. So a lot to unravel, a lot of decisions for all of us to make, and really try to figure out where we go from here. So that's kind of what I got for you guys. It is, well, actually, you know what? I got to go back. I did not give us a stock for the week. Let's go ahead and take a look at our watch list. I'm going to share this screen. We're going to take a look at E-Trade, this watch list that I made for us just for 2025. Investing Challenge 2025. So if we look, Palantir's up, 57%, CrowdStrike up 17. The list goes on and down. I've got it by the percentage gain since we've added this one. So do we want to buy Palantir up here at 125? Not really. I told you guys to buy it in the 70s or the 80s, not 125. I still love the stock, but I'm a little bit less enthused right there. Costco still makes sense to me. I mean, if we get in a recession, Costco should do well. If things don't go well, Costco does well. I mean, either way, Costco's still going to sell. AMD, NVIDIA, Tesla, Amazon. I did buy some Amazon recently. Let's take a look at AMD. AMD reports when? On the 6th. That will be on Tuesday. And I got a feeling that AMD is going to come out on the upside. Do we buy AMD pre-earnings on Monday? Where's NVIDIA at in reference to earnings? They come out at the end of the month. That might give us a little bit more time to kind of digest some things that are going on from other players. Amazon, they just reported. I think I knew that. Yeah, we've got still a stock that I believe has a good amount of upside, 27% upside. I didn't look at the other ones. AMD, was that 40? I think we did just look at that. We got NVIDIA at 43. And then we had, what was the other one? Watch list. Let's take a look at the last one. Tesla. Tesla was negative. I think we looked at that one earlier. You know what? I can just click that. Let's do that. Tesla, TSLA. It does make sense on a lot of different metrics, but do we want to buy into that fear? That's the question. Analyst research. So do we look at this spread, man, from 450 to 115? That's not even close. Oh, boy. The gambler in me says go with Tesla. The smart play is probably Amazon. They've already reported. Maybe I go middle of the road and I go AMD. AMD, I definitely think they're going to outperform on this earnings report. I think they got sold off too much. You still got a lot of tariff noise. Still very much needed in the chip space and AI and all things that are growing. Man, they've definitely got the risks, but I'm gonna lean on AMD. That'll get us 2 shares with my $200. I still said under $100, it's a buy. I've been saying that for a long time. Even when I was buying it at 120, I said if it goes under 100, I'm still a buyer, right? I'm still bullish on AMD, and I think that this is noise. So I'm going to go with what I've said. My NVIDIA position is already pretty large. AMD is pretty large as well. I mean, it depends who you ask, but AMD is, I don't even know what I got in AMD anymore. 24,000, and I'm down 6,400. So could be a good time to buy. I've, had 30 grand into it, and I'm down to 24. So yeah, I'm going to go ahead and buy 2 shares. I'll just buy 2 shares of AMD on Monday. We'll get that added to the Investing Challenge portfolio. And before I let you go, we're going to take a look here at just what is going on for our Investing Challenge. Let's take a look at Webull. I got to pull it up on the phone. Well, I don't have to, but gosh, it's going to make me do all the sign in because I got a new phone. Maybe I won't do this. I know that it was... yeah, this is going to take too long. Sorry, guys. We were doing pretty decent. We were up to 20-something% up, and then we came back down into the teens, and I kind of believe we're probably floating around that 20% gain. Crypto is still looking strong. I thought April was going to be a decent month for Bitcoin. It was. I'm still happy with that one. So my call on Bitcoin was good. Some of the other ones are, kind of just muddling along. So that's what I've got right now, guys. I actually did use that, the crypto.com. All right, guys. Well, that's all the time that I've got for you today. So hopefully that gives you a little bit of insight as to what's going on in the market, where we can look from here, and how we can build our portfolios to have the best success going forward. So, yeah, I mean, there's always a risk in everything that we do, but hopefully this gives us a little bit of clarity as to what we're looking for, what kind of upside we can expect if things go moderately versus, an all-out recession or correction or any of those types of real problems. And what we can expect maybe for going forward 10, 15, 20 years and get some of those stocks that are those 20-time plays that, we look at Amazon, we look at Apple, we look at Google or anything else that has been such a key player from the past 20 years, and we want to think, how can I get in on those at that ground level? And I think we really need to look at the chart. We need to look at, do they have a high barrier to entry? Are their products going to be in demand, and what their competition looks like for the next 20 years? And I think we need to look at chips. We need to look at data. We need to look at all things AI, data centers, all those different types of things, which data centers might be a little bit easy when you just have the space, right? Like an O Realty could have a data center, but they might not have the data, right? Who owns the data? So a lot of that is going to be the drivers that I see going forward for the next 20 years to really give us those outsized gains in comparison to the rest of those stocks that are out there. So that's what I've got for you guys for today. Thank you for listening to the end here on episode 300. Please make sure you like, subscribe, and share. I thank each and every one of you for being here and for your support over these past 3 or 4 years at this point that I've been doing this crazy thing. So it's just a labor of love at this point, and I'm glad to have you guys here. So thank you very much, and I will catch you next time. Take care.